Good morning. We are at May 16, 2019. Um, Looking at the price of oil, and we are in this downtrend. I don't like to think too much, but I think it might be just a small, minor retracement that we've seen on a daily time frame. Because we're not making more of these lower lows. We might be seeing one soon. We'll see. Um, so we've been making lower lows. We're playing for a lower low. So this is an opportunity time right here. The market has retraced, and this is our range we're dealing with right here. See, it still hasn't engulfed that range. This range is from 60.64 to 63.38, and the range itself is pretty big. It's $2.69. The average true range is $1.69 right now. By the way, we're on the higher end of volatility. The IV percentile rank is 100th percentile rank. So that means the market has never been this volatile. This is the most volatile period um, in the last 52 weeks that the market has seen. So, this is opportunity time, where you can cap some big moves. All right, so let's go down to the 4-hour chart. This is our range. This is the 12-hour resistance level. This is the 8-hour resistance level. And that just gives us some context in terms of what side should we be playing? Should we be playing the short side, or should we be playing the long side? I try not to take counter trends. All right, so we're in this range. This is the daily range that we saw, and we're oversold, overbought on the 4-hour. CCI is overbought. What else do we look at on the 4-hour? That's pretty much it. So we'll go down to the 1-hour, and this is really our trade entry chart. This is where we really, where we really look in terms of when to get in or out of trades. The 1-hour is a good chart. You're not looking at tiny movements trying to interpret those with this kind of trading. The 1-hour is pretty much where you're in chart. Okay, so right now let's measure from the low, the previous low. So this move was 2 days ago, and we got out of here with a 60 tick profit in this move. And then we hit a low here. Yesterday's low was hit around 6 a.m. And since then we've been in a rally up. Okay, so we've rallied up over the last 22 hours. We've rallied up $1.81. $1.81. That's a great move. The average true range is $1.06. And the time it took 22 hours to do that. So that's something else we look at. Time, distance, how much time it takes for that move to complete, and distance is super important. And now we're seeing possible reversal here. Here's the MACD indicator is basically at a crossover phase. I haven't talked much about the MACD indicator, but it helps you stay disciplined when you see an arrow going down. In other words, some people would get in short here, but you didn't get the final sign off, and so right now they'd be at a loss if they got in here for whatever reason. So sometimes waiting for that, having an indicator that tells you exactly when to get in. I mean, they're not perfect, but it gives you some discipline as to when to get in, or to try to keep keeping your mind out of things. So let's go back. So we moved $1.08 over the last 22 hours. We're up on an R1 level. Remember, the market in downtrend rarely hits R3. R3 is up here. And we are in a downtrend. We're playing for the next lower low. So we're trying to get short, meaning we're going down. Okay. So even if we went down just to this level, just beyond the range that we're defining here, we would make $2. And if you put your stop here above R2, you're risking 69. If you have it up here, you're risking 177. Okay. But if you put it here, you're risking 67. So this is a good level to have your stop. Why? Because you have the daily range that we looked at on the daily chart. You're above the R2 level, 69 cents. So .69 for that one, and right here we're risking $1.07. That's about the average true range. We don't want to risk more than the average true range. This one's less than the average true range. And if we get back to the close of this day's range, even if you get back to previous low, right, you would have made $1.84. So that's like a 2 to 1. And that can, the average true range is 160, so that could happen today. $1.08. And there's a lot of things that's great about this entry. So we moved $1.08. It took 22 hours to do that. We're up on R1. We've passed the average true range, the previous higher day. And if you get above R2, 1, 2, your risk is only 69 cents. And a potential profit of 1.8. Okay, if you go way out here above the 12-hour resistance level, you're risking 1.7 to get 1.8. And of course, we had to assume, we always had to assume something. So you're assuming that the market is going to continue lower lows, making lower lows on that big daily time frame. You have to make an assumption, and the assumption might be right or wrong. So that's why you have to think about risk management. Really, at the end of the day, it's about risk. You want to get that risk down as much as possible, so that if you're wrong, you're not losing a whole lot. And because you're moving with the bigger picture, the bigger momentum, you won't be wrong most of the time. You'll be right most of the time. And then so when you make that loss, you want that to be the minority of the time, so that over time your risk to reward ratio is super high. So like right now with this strategy, our risk to reward ratio is almost 10,000% since the beginning of the year. So in every trade we're risking, well, how is that? Because in every trade we're risking, the average true range around this number. So we're risking like 1,000, 1,500, and we're trying to go for the average true range. So over time, if you're doing things right, you'll see that you'll accumulate You'll accumulate points. Hope that makes sense. So that's it for now. We'll check in later today, and hopefully we'll get this sell-off. If not, that means you're back in the bulls. You're back in the bull seat, right? If this range, this is the daily range, if this range is broken and this candle keeps coming up and breaks this level, then we're back thinking we're going to make higher highs again. So our whole sentiment will change. Our whole big picture assumptions will change. Still early in this trend. I don't think it's time yet. 5-2 we started this downtrend. Usually they last longer than that. They last for a few weeks. So we'll see. All right, guys, take care.